Hello traders, welcome to your daily market update for the last day of June. Today is D-Day for the Greek government to make their payment to the IMF. The game of chicken will come to a head today somewhat, as much as it is. There's no black or white line in the sand. It is very much a grey area that will continue to persist, but nonetheless Greece has said that they will not be making the payment. They don't have the cash. It's pretty clear they don't have the cash to make the payment. So on that basis, it's very perplexing for myself and many traders, exactly to the scale of the price action that we've seen on the euro yesterday, where we did see that the euro fell and gapped much lower, over 300 pips on the euro Japanese yen, over 150 pips on the euro US, and yet they finished, the euro US finished in positive territory. It bounced, and we've seen basically a 3% intraday move from the euro US. And while some investors may welcome a potential Grexit, I don't believe that the turnaround in that currency overnight really represents the market's satisfaction with the situation. And on that basis, it's pretty crazy to see such a bounce. But the bounce was on the back of the SMB did come forth and say that they were buying euros to try and square away their competitive edge against the euro. They don't want their currency to get too inflated, as it does affect their local market. So they have been intervening. That did help a little bit. We also seen the market react crazily in that sense. The market did flee to the yen, and that does explain such a large gap down in the euro yen, as the yen was a safe haven. But nonetheless, I think that the euro bounce was a crazy one, and I do think that it won't last unless some sort of a deal or something changes, and I think that it will have to fall back in line with the fundamentals that's being priced in across many other asset classes, from bonds to stocks around the world, are all feeling the impact, but the euro isn't as such. So it has been acting a little bit out of character, and I believe that although the Eurozone officials and the Greek officials have been downplaying the situation, it's their job to do so. It's their job to try and prevent panic, to try and prevent extreme market reactions, and right now they're doing a great job of it. They have been alluding to the fact that a deal can still be done, but you'd think that with only a few hours left of the deadline, it's pretty much impossible for the Greek officials to come up with a plan to take it to the IMF, to get it done, voted on, and sealed all before the payment is due. Is all about that window, and that bus is pretty much left. And I think that investors will continue to unwind their long euro positions, and we will continue to see the currency pair move lower. Now, I must note, though, I don't think that Greece missing out on today's payment is going to send the markets crazy in terms of the euro. I am hoping that it does weigh down on the euro and it starts to act a little bit more rationally. But Greece not making the payment doesn't automatically suggest that they have defaulted, because the IMF and other official notifications won't be coming out, I don't believe, straight away saying, yes, you've defaulted, and pretty much you're going to get kicked out of the Eurozone. It's not as simple as that. They will wait for the referendum vote before making any sort of comment, I believe. So it's going to be interesting to see how we trade in today's market, given that the speculation is still going to be quite erratic and crazy. And on that basis, we are not going to see the economic data coming out today really playing a major impact. It's going to be all about the risk-on, risk-off sentiment. Although the Great British Pound data, the GDP, will be watched, and that may help support the pound. If the data comes in favourably, well then that's something we could be looking for. The market will be also focusing on RBA Governor's discussion tonight. He is in London and he will be speaking. And if he does mention anything about the Australian circumstances, the Australian dollar could react. And as we've seen today, which I'll get to, the New Zealand dollar has come under a bit of pressure on today's data, being a little bit weaker and contractionary. So we will be focusing on that. We do have core CPI and CPI data out for the Eurozone. I think that overall it's going to remain quite flat, and I think that that's going to be overshadowed by the Eurogroup's discussions and meetings. We do have Canadian GDP, and that will be important. I will be talking about that in terms of the charts. And then moving on, we do have Chicago PMI, consumer confidence for the US, and hopefully that data can come in solid as it's expected to. And if Chicago PMI does come in at 50 or above, that will be a strong sign for the US dollar, and we could see that actually bounce and the market really move away from its concerns regarding Greece potentially stalling any interest rate hikes for the US. We do have member Bollard speaking, and hopefully he provides some further insight as to their plan. Moving on, the US dollar did gap higher and then it has closed that gap. It did overshoot it and extend lower. However, I am looking for some support from the data coming up to tonight, and the fact that pullback I don't think was a rational one, as the US is going to raise rates at some point. The US economy is the strongest in the developed world, and the concerns overnight and the reason for the US dollar coming off, I believe, are on the back of fears that this Greek situation is going to rule out an interest rate rise in September. I don't think that that's really going to be the case. Greece only attributes to 0.2 of even 1% of the global GDP. So the situation in Greece also has been going on for many years. It's just that if the Greece situation creates contagion across the globe, that may prevent the Fed from really wanting to act straight away. But for now, we don't really see that. The Chinese stock market falling isn't attributed to Greece really. It has its own issues, and really the US stock market coming off could come down to some other factors as well, which I don't really have time to get into today. But I think that the US dollar bull story is well and truly intact. And something we can look forward to seeing rolling out over the remainder of the year, I believe. Let's go over to the charts. I'll start off with the Eurozone, because that is what everyone is talking about. You can see this major downtrend, and we do have this rising flag right here. We did get a gap lower, admitting to a breakdown of this flag. However, we did pull back up, close the gap, and we are trading roughly at Friday's close now. So where we head to from here is going to be subject to how things roll out moving forward. And if we put the price action from yesterday behind us, we are still within the flag, but I think downside pressure is still going to persist. And I think that with some strong US data tonight, that will also help the situation. So I would be considering for the euro to remain under pressure as they don't make the payment, and the situation each day gets worse and worse. We are seeing protests in Greece and a whole lot of social unrest just beginning, and I think that it could get worse over the next 5 days, but we'll wait and see on how the members go with convincing the Greek people on which way they want to vote. For now, they're suggesting that they all vote no, and if that's the case, I believe that's the biggest bear case for the euro, as it will create short-term instability. And ultimately, though, I think that it will be the best thing for the euro in terms of strength. Let's have a look at the New Zealand dollar. I've got it on the daily chart here, and you can see that it has come under further pressure as the data wasn't too strong today. So the bear trend continues for the New Zealand dollar. There's no real end in sight. I'm now on the 4-hourly chart, and you can see that we did have a bit of a bounce yesterday, and we have rolled over. I think that will continue to move lower. We have the RBA governor speak tonight in London, and if he mentions anything, we could see the Australian dollar move a little bit. we are still range bound, and I mentioned yesterday that I don't see a break out of that until the RBA delivers potentially a decision on their rates next week, or the Fed raising rates becomes the flavour of the market. So we'll have to keep an eye on for that. The Great British Pound was fairly steady. You can see that we did move around a little bit. If I go to a 4-hourly chart for you, you can see that we're pretty much unchanged, as it was the more stable currency pair throughout yesterday's turmoil, and that will potentially continue today. But we do have that pound core CPI data to keep an eye on, and if that does come in favourably, we could see that support continue. US dollar versus the Canadian dollar, I mentioned yesterday, makes the most sense in terms of the price action and the most stable. I believe that oil prices are going to continue to undergo a bit of pressure as the euro situation weighs on oil, and also there's a potential deal with the nuclear deal with Iran and the US. Talks there, if that was to go forth, well then they would be able to supply oil to the market, and that would weigh on the oil price as well. So, and with my view on interest rates rising in the US and the US dollar bull case, I do like the US dollar Canadian dollar for the long term. But for now, we are contained by this downtrend line and just the pressures that are going on right now. But I think that as soon as we get the excitement from the market in terms of realizing that there will be an interest rate rise this year, we will get a breakout, and we will start to see a trending market in this pair. The US dollar versus the Japanese yen's coming back down. It just wants to test 122 once again, and it's going to be interesting to see how things go just throughout this region. I should probably move this yellow box right now, and you can see that anything inside this yellow zone, I'm happy to be a buyer of, as I am a long-term US dollar bull, just on the fact that I do believe they'll be raising interest rates, and we could see the US dollar moving higher over the next few months. And then after the interest rate rise itself, I'd be reconsidering my positions from there. All right, well, that's it from me today. Trade well, keep an eye on the news. It will be headline driven, so keep your eye on Twitter and the latest news feeds, as Greece is expected to miss its IMF payment, and funding for Greece will come to an end. I'll be talking to you soon, so until then, trade well.